3semesterb.com. Examination March, April 2023 and 2024. NEP Solved Question Paper 2024. Commerce. Indian Financial Services. 1. Answer any 6 sub-questions. Each sub-question carries 2 marks. 6x2 equals 12. A. Define stock exchange. According to Docky, stock exchange are privately organized market which are used to facilitate trading in securities. B. What is OTCEI? OTC stands for Over-the-Counter Exchange of India. It was incorporated in 1990 under the Companies Act, 1956. It is an electronic stock exchange based in India that consists of small and medium-sized firms aiming to gain access to overseas capital markets, including electronic changes in the US such as Nasdaq. C. What is housing finance? It provides facilities for house building. National Housing Board established in 1988. It is an OPEX banking financial institution in a country. Number of specialized finance institutions entered in the field of housing finance. D. Expand ICICI and NIDC. ICICI Industrial Credit and Investment Corporation of India. NIDC, National Industrial Development Corporation of India. A. What is intercorporate deposits? It is an unsecured borrowing by corporates and raising from the other corporate entities that are registered under Companies Act. F. What is day trading? It refers to actively buying and selling of securities within the same day, trying to capitalize the short-term change in price. G. What is derivatives? It is a financial instrument whose value is derived from the performance of an underlying asset, index or rate. H. What is repurchase agreement? A repurchase agreement, repo, is a contract to sell securities, usually government bonds, and repurchase them back shortly after at a slightly higher price. Section B. Answer any 3 sub-questions. Each sub-question carries 4 marks. 3x4 equals 12. 2. State the objectives of financial system. Economic growth. Distribute savings for industrial investment. Stimulate capital formation. Mobilized savings. 3. Briefly explain the advantages of capital rating to the investors. Helps in investment decision. Risk management. Save investor time. Liquidity. Diversification. Market efficiency. Capital market access. 4. State the objectives of IFCI. The corporation grants loans and advances to industrial concern. To provide financial assistance to medium and long-term enterprises. To subscribe, underwrite, purchase and sale of stocks, bonds, shares and securities. To draw and accept any bill of exchange, promise note or other negotiable instruments. To set up investment company. To carry on business of leasing and hire purchase. To establishment of mutual fund, venture capital fund. 5. State the features of OTCEI. It is a flawless exchange, in which all activities are fully computerized. It promotes designated as sponsor member and they alone entitled company for listing under SEBI. It allow query and transaction through Center OTCEI, under dematerialized form. It deals in equity shares, preference share, bonds and debentures. SEBI and Government of India supervise and regulate the working. 6. Briefly explain the importance of money market. Financing trade. Financing industry. Profitable investment. Self-sufficiency of commercial bank. Helps to central bank. Adopt appropriate banking policy. Section C. Answer any 3 sub-questions. Each sub-question carries 12 marks. 3x12 equals 36. 7. What is financial system? Explain the impact of financial system on economic development. Financial system. Financial system is a set of institutional arrangement through which financial supply available in the economy are mobilized. Impact of financial system on economic development. It helps capital formation, encourages saving and investment, applicable to global, regional and firm level. It brings accountability for investor. It allows transfer of money between saver and borrower. It includes financial market, financial service, financial institution and financial transaction. Economic growth. Distribute savings for industrial investment. Mobilized savings. 8. What is mutual fund? Explain the types of mutual fund scheme. Mutual fund. It is defined as pool of fund collected from many investors for the purpose of investing in securities such as stocks, bonds, money market instruments and similar assets. Types of mutual fund scheme. On the basis of operation or maturity period. O open-ended scheme. O close-ended scheme. O internal scheme. On the basis of investment objectives. O income scheme. O growth scheme. O balanced scheme. O tax saving scheme. O index funds. O sector funds. O money market fund. On the basis of geography. O domestic mutual fund scheme. O offshore scheme. 9. Define venture capital. Explain the types of venture capital. Definition of venture capital. According to International Finance Corporation, venture capital is defined as a type of private equity investment that is provided to early-stage, high-growth companies that have innovative business models, products or services. Types of venture capital. Seed funding, startup capital, first stage first sound or Series A funding, expansion funding, late stage funding, bridge funding. 1.0. Explain the functions of stock exchange. Providing liquidity and marketability to existing shares. Pricing of securities. Safety of transaction. Contribute to economic growth. Spreading the equity cult. Providing scope for speculation. Continuous market for securities. Mobilize surplus savings. Listing of securities. Clearing house of business information. 1.1. What is money market? Explain the money market instruments. Meaning of money market. Money market, a set of institutions, conventions, and practices, the aim of which is to facilitate the lending and borrowing of money on a short-term basis. Money market instruments. Treasury bill. Treasury bill is a money market instrument as issued by the Government of India. The bill is issued as a promissory note of repayment in the future. The purpose of a treasury note is to secure funds to meet the short-term fund requirements of the government. It is done to minimize the fiscal deficit of the country. Commercial paper. Commercial paper is an unsecured, short-period debt tool issued by a company, usually for the finance and inventories and temporary liabilities. The maturities in this paper do not last longer than 270 days. These papers are like a promissory note allotted at a huge cost and exchangeable between the All India Financial Institutions, IFS, and primary dealers, PDs. Certificate of deposit. Lending substantial financial resources to an organization can be done against a certificate of deposit. The operating procedure is similar to that of a fixed deposit, except the higher negotiating capacity, as well as lower liquidity of the former. Call money. Call money is a short-term, interest-paying loan from 1 to 14 days made by a financial institution to another financial institution. Due to the short-term nature of the loan, it does not feature regular principal and interest payments, which longer-term loans do. Commercial bill. A commercial bill is a short-term financial instrument used in the business sector to facilitate trade and finance transactions. Typically issued by a borrower, such as a company or trader, it serves as a written promise to pay a specified sum of money on a predetermined date. Commercial bills are often discounted by banks or financial institutions, allowing businesses to obtain immediate cash before the bill's maturity. Repurchase agreement. A repurchase agreement is a contract to sell securities, usually government bonds, and repurchase them back shortly after at a slightly higher price. Reverse repo. A reverse repurchase agreement, RRP, or reverse repo, is the sale of securities with the agreement to repurchase them at a higher price at a specific future date. A reverse repo refers to the seller's side of a repurchase agreement, RP, or repo. Thank you. Subscribe.